Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 26, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Today we'll look at stocks as usual. Dow Jones hit new records, but all of the major indices basically are trading next to records and now pulled back sharply for the week. I think this could continue, and we'll look at one example why I think that is going to continue into March for utilities. We'll look at more details at various bond instruments such as municipal bonds, treasuries, and 30-year treasury yield, which I think is a bit oversold right now. Dollar held its ground strongly, and gold basically collapsed, so we're very close to the bear market for gold, and we'll look at both gold, silver, and gold miners. And I think the rally in cryptos might be coming to an end, at least for now. We'll see what gonna happen in the future, but the recent gains might be coming to an end. We'll look at Ethereum and Bitcoin. And for my paid subscribers, I have two newsletters. I have an elite newsletter. I'm gonna cover all of these stocks in a separate newsletter, in a separate video. And for the speculator newsletter, I'm gonna cover all of this stocks. You can see there's quite a bit of stocks for the speculator. And between the two newsletters, so elite is more like large cap stocks and ETFs, Forex. The speculator is more, speculative stocks, basically. All right, well, let's get right to it. So first of all, how do you guys find me? Go to everyonecantrade.com. It will go to the same place as MasterChartsTrading.com. So what I offer is I offer 3 levels right now of service. I have trading indicators. I have the elite newsletter, what I just described, where you get all kinds of alerts about foreign, or about email, about the ETFs, large cap stocks, Forex, gold, cryptos, etc. However, if you want something more advanced and just more, there's more stuff going on, consider speculator bundle. And also the trading indicators. So the trading indicators, basically it's my core product, and this is I use them pretty much exclusively to trade. So on this chart you can see them. They're the green, blue, red, and yellow lines. So these indicators, they show what's called support and resistance. So when the price breaks out above the support resistance line, in this case it's a blue line, so blue line is a bullish trend setter, and the indicators are calculated, so you are these indicators are not just drawn in by hand. I can turn them off, for example. They are mathematically calculated. So what I do is I pretty much exclusively use these indicators to trade. So for example, on this chart for S&P 500 mini futures, you can see a clear breakout back in April of last year, and since then we were basically trading only on the upside. We're only thinking about buying. We're only buying calls, and we're just continuously hitting new all-time highs, and our stop is at the blue line. You see how far away we're still from the price action. So if we bought it back here in April, May of 2020, we would still be trailing it. Now, another option for people is to take profits. So when the stocks come up, usually what I like to do is when a stock comes up above the green line and then comes back below the green line, then that's where we take profit. So again, these lines, they are calculated, and they are you can think about them as moving pivots or support resistance lines. Very convenient. You can have them on your chart. All you need to do is just sign up, and I'll open the door for you on TradingView. If you have any questions, ask me. So Dow Jones hit a new record. So this is very similar patterns again, from last year. You can see nice opportunities to buy, to go long, and since then we're basically just trailing at the blue line itself. Current price action is really interesting, I think. So we made a new record here on 24th of February, and then immediately sold off. So this is still very much a bullish chart. If I'm hoping we're gonna have a significant pullback potentially, and if we get a significant pullback, then I'll be looking to be buying around the blue line, which is currently around 13% away from price action. Now, where is the bear market? So how much does the stock market right now needs to drop for me to think bearish? So right now the stock market needs to drop towards the blue line, which is 33% away. You see how far away we are from bear market? So a lot can happen in this area here. So right now bear market is around 20,000 for Dow, and we're at 30,000. So we're really far away still. This is just not to say that we cannot drop. People say all kinds of crazy stuff, like for example that stocks only go up, and that's just not true. That the government will come in and rescue stockholders, some other ridiculous thing. So none of that stuff actually makes any sense, and I would highly discourage people from just don't worry about the fundamental stuff at all. You need to worry about how to trade. So if the chart is in front of you right now, like for example this Dow Jones chart, how would you trade it right now if somebody came to me and asked me? And I'm like, I wouldn't. There is no opportunity to buy this particular chart right this instant. There are many other opportunities, and we're going to be looking at some of them, and I'm going to show you some of those trades. So NASDAQ also dropped about 4 or 5% for the week. Overall, not terrible. I mean, it's a wonderful chart. I mean, again, we started buying back in April of last year, and as much as 61% gain. So we're right now approaching this area where I would consider taking profit. So if I had a position from way back when, from April of last year, when the stock, you can see the price coming down towards the green support resistance line. If it closes below it like it did here back in October, then that's a good place to take profits. And then the stop is at the blue line. So if it gets to the blue line, we'll just close the position and see what happens next. Maybe the stock will continue lower. Maybe this NASDAQ will continue lower. Maybe it will, just skyrocket. But we need to be, cognizant of our own trades. So if we bought at the blue line, I think I would be exiting at the blue line as well. Here's IWM small caps. Again, very similar patterns, minor differences. So for example, here on IWM, there was an opportunity to enter in September. And for QQQ, there was no opportunity to enter in September. The pullback wasn't deep enough. I like to see a pullback towards the blue line. Here on IWM, you can clearly see it. So this pullback into September was an opportunity, and we went ahead and just bought it right there. So very clear. You see how easy it is to trade. Right now, again, same general principle as the rest of the stock market and other indices. We're pulling back from the records. Bear market is God knows where. Bear market is 46% away. At the yellow line, we're nowhere near a bear market. So many things can happen here. What I'm expecting is a sizable pullback, perhaps. Maybe we can get to the blue line, which should be pretty sizable. It's like a 20% pullback from the highs, and that would be just a wonderful opportunity to buy. So when or if it gets there, we will absolutely look for buying opportunity. All right, so switching gears, now we're looking at bonds. These are municipal bonds, MUB. It can be traded exactly the same way as stocks, and we did just that. You can see opportunities to buy as early as March of last year. So this is another reason why I was very reluctant to sell short, because look at this Opportunity to buy was as early as 26th of March of last year. For example, small caps, the breakout took a while. It was in May, you see. But municipal bonds broke out early. So, and municipal bonds are, they're more like stocks. They're not a very high quality bonds. So they're definitely not, very super high quality bonds. They trade more like stocks. And when this stuff started happening back in March of last year, I can see there was a strong bullish, strong price pressure to the upside. So this is another reason why we just, even though opportunity, for example, here for IWM to sell short in April of 2020, we did not take it. And the reason being is because of the way action was in bonds, especially the low quality ones. And the junk bonds as well. So right this instant, you can see it landed exactly on the weak support. It's weak support, just that, it's weak. Strong support is at the blue line. So municipal bonds could still drop from here and still, be in a bull market. And we'll be looking for buying opportunity if or when we get to the blue line. Now, Treasuries are really cool chart. Here's Treasuries TLT on the daily chart as well. So I basically trade on daily chart almost exclusively. Some people like to go to like 5 minute, whatever, 1 hour. Now stocks, bonds, ETFs, I 100% trade on daily charts. If I trade Forex or cryptos, then maybe I'm thinking, or gold, maybe I can trade on like 4 hour or 1 hour or 5 minute chart. But here's TLT. So Treasuries, I had a position back, I bought it in 10th of September, a pretty normal kind of opening of position, just close above the blue line, and then it didn't go my way. So coincidentally or not, right here on 6th of January, you can see a breakdown below the red line. So for me, for when I trade Treasuries, I use more of a Forex approach. So when I trade Forex, I close above the blue line and close below the red line is where I, buy or short. The same I do with Treasuries. It's just from experience, I noticed this. So opportunity to sell short right there the day of riot on 6th of January, and another beautiful opportunity right there on 27th of January. So this is how I decide to sell short, basically. Security broke down, definitely in the bear market. In this case, it broke down below the red line, but if it was a stock, I would need to see a breakdown below the yellow line. In this case, it's a bond, so I'm okay with even breakdown below the red. So we can just short right there. And then another opportunity right there on the 27th of January. You can see it just came up to the line, touched it, and then sold off. So this is, the situation right this instant. Very steep decline for Treasuries. By extension, it's a very steep rise for the yield. So TLT, opposite of it is TYX, so 30-year Treasury bond yield, and you can see it spiked into February 25th of this year up to $2.4%. So on the day of the riot, right there, it was 1.8%. So a significant increase for the yield, and mortgages, etc., are also affected by this. So the way TLT, the Treasuries, they move opposite to TYX, obviously. 30-year Treasury bond yield and 30-year Treasury bonds, they move opposite to one another. So, I could kind of see this oversold, really. Candles, and just the way it collapsed, it's just too steep. So this is, wonderful if you were short, and you probably should have exited at least partial by now. But now we're seeing a bounce. So now we're going to see a bounce, and we're going to look for where is this bounce is going to end. So I'm looking for this bounce to continue towards the red line, which is currently at 152. So there is some room to run still for TLT. TYX, same thing. Yeah, we're just gonna need to pull back a bit. So for TYX, pull back to the blue line of 16%. So I think it might come back to the breakout level, and then I think it might rally again. So I would be on the lookout for a pullback, and then we'll get short on TLT again if it gets to where I want it. Now, when treasuries are dropping, it's the opposite of stocks. So stocks and treasuries, they have decent negative correlation. It's not 100%. It's about I want to say, I don't remember exactly, 30%, but it's closer. The correlation is significantly negative between treasuries, long-dated treasuries, and stocks, to consider them virtually uncorrelated. So I look at treasuries as a separate asset from stocks. And when treasuries are dropping, that means that risk is decreasing. But when treasuries are rising in price, that means risk is increasing. So what's happening right this instant, I think, is we're going to see an increase in price of treasuries. I'm thinking we're going to see around 6% bounce continue towards the red line. So when that is happening, most likely stocks will come under pressure because of the correlation. Because if the stocks, or rather if the bonds are going up, that means risk is increasing, and stocks are riskier than bonds. And if bonds are going up, stocks usually come under pressure. Additionally, there are some stocks that are showing interesting patterns into the future we could try to interpret. So here's utilities, and actually we have a position open, or rather alert was sent here to my subscribers in December, and you can see right now it's just not doing great. Utilities are pulling back. So what I'm going to do is I'm going to turn on my indicators which look into the future. So it's the same indicators, they just offset. They're not yet available to the general public, but I will release them very shortly, hopefully within a month or so. Okay, so here's what I'm looking at right now. So if I turn them off, you can see the current situation. So there's right now 26th of February. But if I turn them back on, they're projected into the future. So here's what projections are showing. We're currently here at 26th of February, and you can kind of see where the indicators are curving down into the future, and the bottom is around, well, the bottom should be somewhere between 8th of March and 18th of March. So we're looking at some pretty serious volatility in the upcoming several weeks. Now, additionally, if we look at this chart carefully, so for me to consider a stock to be in a bear market, this is a stock, utilities are stocks, I want to see a close below the yellow line. So yellow line is really not that far off. If I turn them off, the future ones, right now the yellow line is pretty far. You can see it's like 17-18% away. However, since I can see the future a little bit, I can also see that in the future the yellow line is actually gonna move up, and you can see how much it's gonna move up, significant. So in this case the bear market is only 4% away, you see. So this is called narrowing of a trading range. And we don't know what's going to happen between now and when the trading range will narrow significantly, which is 6th of April. So we're looking at the entire March, potential some kind of strong volatility, and the way utility, or rather the way bonds are acting TLT, it's possible the utilities are feeling the pressure because utilities need to borrow money. So the cheaper the borrowing, the better. But in this case, Treasury, the yield is actually going higher. So utilities are having harder time borrowing, or have to borrow at a bigger percent interest. So right now what we're looking at is a potential reversal, and the utilities, even though they seem to be not very important, to me they're actually very important because they're sort of like a bellwether of the entire stock market. So I'm watching this extremely carefully. I mean, I know we're narrowing the trading range, and the trend change can be very easily accomplished now, you see. So we're going to be on the lookout for a trend change for utilities, which could spell trouble for the rest of the stock market, really. Okay, right now we're looking at dollar index, DXY, on the daily chart as well. So dollar is, Forex, and this is the way we trade it. We trade it, if it closes below the red line, we sell short. If it closes above the blue line, we buy, we go long. It's that simple. So if we had, for example, here on the 2nd of June, if we had a long position, we bought it back here in May, we would have closed our long position and reversed our position. We would have shorted it. Successful trades, very successful trades. Right now, dollar seems to trying to bottom. Latest test came on 4th of February, 5th of February, where it bounced off the weak resistance. We can clearly see it on this chart. Now, the action of last 2 days is quite encouraging for the dollar bulls. So this, I'm going to just turn it off for a second. Right there on 25th of February, so you can see my indicators, they kind of collapse the price, collapse the candlesticks. So I turn them off for a second. I'm going to show you just the price action. So here's 25th of February. Here's 26th of February today. So 25th of February, clear hammer candlestick. This is a hammer candlestick. You can see a small real body, a small shadow at the top, huge shadow at the bottom. So this is showing that the price, the bears tried to push the price lower, but the bulls came in and bought it out, during the session. So during the session, sometime bears tried to push the price lower, bulls came in, bought it out, closed the price above the entry, above the opening. So classical hammer candlestick. And then what's nice is that next day is a confirmation. It gapped. So from yesterday's close, 26th of February, to today's open, right there, it gapped up, and then throughout the day, it did something, but it closed well above the entry. So this combination is like a classic bottoming combination. So I'm thinking that we're going to see a rally in dollar continue. It's possible. It's strongly possible. Another reason is because of the way gold is acting. So here's gold futures, and if you listen to my previous videos, I've been warning about this already. Actually, since this big candle right there, since November. I was worried about since November, and then this big candle got me even more worried in January, and I was kind of pretty correct. And so the bear market for gold is at 1690. So this is a red line where I'm hovering right now. This red line is where gold will enter into a downtrend. And if before, so you can kind of clearly see it, if before we were buying it on close above the blue line and just holding it or whatever, now we're going to be doing the opposite. We'll be once it closes below 1690. 1690 is a bear market right now for gold. If it closes below 1690, I would just short it, because we could just collapse, similar to the way TLT collapsed. So for example, here's TLT. This is the way you sell short. So closed below the red line, was just shorted right there with a stop above the blue line. You see, and the same goes for gold. You know, if it's approaching the bear market, so we're just gonna basically sell shorted there. Silver, on the other hand, you know, you can see the divergence, big divergence. Whereas gold just didn't really go anywhere. Silver made a new high, new record right there on 1st of February. But even now, it's under pressure. So we can look at 4-hour charts. This is 4-hour chart now, and clear, very good, you know, just obvious chart. So here's gold chart and 4-hour chart. There's the breakout, or rather breakdown right there on the 8th of January. And on the 4-hour chart, I was just shorted right there. And I would have been already profitable on the 17th of January. So, you can trade using my indicators on the 4-hour charts, or pretty much any charts. And there is another opportunity to sell it. So, right there, for example, good opportunity. Just anytime close above the blue line, we put our stop at the, rather above the, anytime it touches the red line and then closes below it, we're gonna put our stop at the blue line and sell short it. There's another opportunity right there on 10th of February, high above the red line, close below it, we sell a short. Very successful. Now I think we're gonna need to see a bounce to like 1807. But, you know, again, so 1807 is like, let me see, excuse me, 1707. So like 1800 maybe. So like we may see a bounce to like here, but I think the direction might be already down. So yeah, very interesting action. Here's 4-hour chart for silver, and again, it's very interesting. So 1, 2, 3 times. So 3 times it's been testing this red line. Today it tried on the 4-hour chart. Today it tried to close below it. You can see it just landed right on it and stopped right there. So let's see what happens Monday. If it gaps below, then I think we could see a strong move to the downside for precious metals in general. Here's gold miners GDX. So I was just not really sure about what's happening with gold, so I did not actually send any alerts, even though there were opportunities clearly right there to enter on the long side to buy GDX. And today you can see it's a new low for the move from the 5th of August into today. So it looks bad. It looks like, you know, if gold continues lower, obviously gold miners will come under pressure. So yeah. All right, let's get close to wrapping up. So Bitcoin, same thing, you can trade using my indicators. So Bitcoin back, alerts were sent in April around, you know, $8,000. How do I know? It was a breakout above the blue line. That's all I needed to know. And if you just held it and you know, trailed the blue line itself, you can see how profitable this would have been for you if you just simply held it at the blue line. Another couple of opportunities were just a few days ago, well, a few weeks ago. And, you know, if you held it, you can have 570% profit. So about now, I would be taking profits for sure. I think we might be overdue for a pullback, yeah. Ethereum, same thing. You know, I had a position. I thought I was smart, and I exited in December. Notice I missed an enormous move. So follow the system. Just keep trailing the blue line itself. All right, so that's it for this week's recap. Head over to Everyone Can Trade or MasterChartsTrading.com. That's MasterCharts, MasterChartsTrading.com or everyonecantrade.com. It will go to the same place. Click on products and sign up for one of the products. So the indicators that I'm showing in this green, blue, red, and yellow line are the trading indicators. They are available for TradingView, and you only need a free TradingView account, but you do need to sign up on my site. It's 30 bucks. You can definitely afford it. Elite Trader includes the indicators. It includes alerts on about 100 securities, and you can see what we trade. So this is what we trade in the Elite newsletter right there. And this is what we trade in the speculator, but this stuff changes constantly. So this is, will need to be updated every so often. So this is the Elite, and the speculator I think is by far the best thing, best deal. You get so many interesting opportunities, many alerts. This bundle may include some private lessons. I haven't yet updated yet, but I think we may see some private lessons in the speculator bundle, but not yet. Alright, that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching. Have another great trading week. Bye bye.